Welcome back to Midcap Radar. Even as the market slips a little bit, we are now putting the focus and the spotlight on the infra space. This is to decode the Q4 as well as the FY24 earnings and the impact of the ongoing election on ordering trends. To discuss this and more, we have Priyankar Biswas from BNP Paribas joining us now. Good afternoon, Priyankar. First of all, thank you so much for taking the time and joining us here. First up, give us a quick wrap of how did you see Q4 pan out? How did you see FY24 pan out? We understand NHAI ordering wasn't something that was up to the mark. And also a sense of the largest player in this particular space, L&T, they have also guided for weaker margins given the intensive competitive intensity.
Yeah, thanks, Vivek, for having me. So, of course, as you were firstly asking about this NHAI ordering, so this has been kind of weak. When I say that, it is almost like 30% down year on year. So essentially 8,500 kilometers worth of highways have been ordered. So this is something which is an usual phenomenon, I will say, in election years. So let's say FY14, even 19, we have seen that. But that is not to say that we had a general slowdown. Generally, we had order inflow coming in from spaces like transmission, and there is a strong, healthy pipeline, of course, of the projects. Since you asked about L&T, so what has happened was we had seen some correction in L&T just exactly after the results. So that was probably driven by the relatively muted core margin guidance, so which was, let's say, flattish YOY. What I think is that it is probably a conservative guidance. So they have been underperforming on the margin guidance for some time. And they have given a relatively strong order inflow guidance of 10% on a relatively robust base. The thing is that there are concerns that probably there would be a slowdown, let's say, in Saudi Arabia or the Middle East. However, honestly, if you ask me, I do not think so. So that is something we had worked upon. And this is borne by some data points like, for example, Saudi Aramco capex has actually gone up. That's what they have announced for the next year rather than the expectation that it will go down. So those things are there. So what we also believe is that going forward, the non-infra portion in the core will start increasing. So especially driven by real estate, and that can actually lead to some bit of margins coming back. As far as your question on competition, the way I will put it is, yes, due to the weak NHAI ordering, a lot of this road construction names has actually started bidding in projects like in railways and metros in certain EPC works. So there the competitive intensity did go up. But having said that, for relatively complex projects, rather higher ticket size projects, we have seen the competition actually being lower.
All right, Priyankar, I'm more interested in your logistics side of things, and Aegis Logistics, that's a stock that you've been pretty bullish on in the past as well. And the stock has seen a big rally. If you just pull up a chart for this year itself, in 2024, the stock has doubled. In the last month or so, it has seen a big up move. It's outperformed the market by all parameters. This year, stock up 120%. How much more do you think is an upside on a stock which has already rallied so much? Gas prices have come down, so they always have the benefit of, the cushion of margins every time the gas prices do come down. From here on, where do you see the stock going, and is the best of the up move behind it?
So I won't say the best of the up move is behind. So we had put down a report yesterday on Aegis, so where we have increased our fair valuation to around 870. But having said that, we have also did certain scenarios like up to what level it can go up to based on certain levels of, let's say, like upside that can possibly happen. So even in such scenarios, it is possible that the stock can even go and trade up to 1,050 odd levels as well. So that's our published view. Now, what we are saying is that we have actually taken a EPS CAGR of more or less very close to 20% from FY24 to 27. Now, mind you, the management guidance is far higher, is what I will say. So they are saying like 25 odd percentage. And if we consider that aspect, there is, of course, further up move potential. Now, I would highlight that results were also there on Friday. That was a spectacular set of results. So like close to 39% beat on our EBITDA estimates. More important than the results, the outlook was far more stronger. So they had even gone and ventured into ammonia terminals. So that's what they had said that. So Aegis is no longer, you can say, going forward will be a single, let's say, commodity play like a propane or a LPG. So we can consider it even like for ammonia potential going forward. So
Right.
it's a combination of net cash, strong growth, and reasonable ROE. So we are speaking of something like 17-18% ROE.
Priyankar, we are running out of time, but I want your view, very quick, short view on two more stocks. You've been quite bullish on JSW Infra. The company has also said publicly that they are looking for inorganic growth, names like Navkar Corp, something that they may anticipate. So JSW Infra, I want your view, and I also want what could be the upside in case they go ahead and manage to conclude a successful acquisition. And the other stock is Container Corporation. What's your view over there?
Yeah. So firstly, coming to JSW Infra, so they have a huge runway for acquisition. So that's something we highlighted because they are almost like net debt free at FY24. And they have a target range of 2.5 net debt to EBITDA. So essentially, there is a lot of cushion. They have a 30,000 crores capex pipeline. So it will be both organic and inorganic. And given if we are assuming a 16% ROCE on that, so our target price is based on that. However, if they do much better and if they are able to do, let's say, operating assets offhand, which is definitely a possibility, then in our scenario analysis, it can be potentially like a 350, 360 as well. That's what we had highlighted. So we see this as a play on Indian steel demand without taking the price risk. That's how I will put it for this net. Coming to your second part about Container Corporation. So, of course, the company has been losing market share for some time. And the pricing pressure by other peers have been clearly been evident. And there has been a recent question marks on the LLF part because on the particular Tughlakabad terminal, the demand by Indian Railways is different from what they're booking. But what we will highlight is it's a play on the WDFC, that is a Western Dedicated Freight Corridor, and importantly on the divest potential strategic stake sale by the government. So if post-election something material happens on that, we see that there can be an up move. Now, management has also highlighted one more thing about this LLF, that if they transform themselves into Gati Shakti terminals, what they are trying to do, then yes, their LLF levels can come down by close to 100 to 120 crores from current levels, and that can be a positive.
All right, take that point. Thank you so much, Priyankar, for joining in and giving us your views on a whole host of stocks. We should speak to you soon again, and especially when we see any big move on Aegis Logistics, we'll definitely call you to ask you what exactly is taking place. We take a short break, come back on the other side. We focus on a lot of other stocks which are on our radar, on mid-cap radar.